Our weekend meetings that we usually do every Sunday, we like to go over a lot of information a week ahead. That way we know exactly what's going to happen before it happens, as well as knowing risk levels and all kinds of stuff. Because if you're a new trader, you're just going with the flow, and but a lot of times people think that news alerts or alerts in general are important, which they are to an extent, but what's even more important than that is knowing when the alert is going to take place, and that way, like I said, it just gives you more an advantage. And as we get these news alerts, they happen because of scheduled events, and that's why it's important that we always go over these scheduled events before they happen. That way it's not a surprise. And so and it's important to always start from the top meaning the scheduled events that will have the biggest impact on the stock market. And as we do our due diligence on that, those are basically the economic reports. Economic reports have a huge impact on the stock market and the economy, as well as Fed meetings, and this week we got elections. And so let's go ahead and dig right into that. And one of our famous websites that we use a lot for that is a website called investing.com, and it's also an application. However, in the calendar area, we want to make sure that we're on the economic part of it, and there's a couple things that we need to configure really quick, and we need to clear everything, and we need to put a check mark under the United States, and then under importance here on the bottom you'll see a 1 star, 2 stars, and a 3 stars. We want to put a check mark under 3 stars because we're telling the system that we want to see everything that'll have the biggest impact on the stock market that's scheduled to happen this week. So then we want to click on this week. That way we can see everything that's scheduled for the economic reports. Now, because of the election and whatnot, there's a very a light amount. What we're seeing is our normal weekly economic reports, like our crude oil inventories and the unemployment report that they call the initial jobless claims. But we do have some major ones coming on Thursday for the CPI year over year for the month of October, and so these are going to have provide a lot of volatility for Thursday based on those. And so it's very, very important that when you're doing your due diligence on this, that we're also looking at the times of when they're going to be released. Because shortly after that, and it could be a minute later, it could be 5 minutes, it could be an hour later, that's when we start seeing those news alerts on this economic report that is having a major impact on the stock market. And so this is where you can have an advantage by knowing what's going to happen before it happens. So normally with economic reports, we see these on a Tuesday, Wednesday, and a Thursday. We don't usually see these on a Monday or a Friday. And so but we do see the short-term energy outlook report to be reported on noon on Eastern time, which is what the website is going to base it on. So that's where, depending on your time zone, you may have to do a little bit of math to determine when that will be released. But if you're looking at it on your mobile phone or tablet on the investing.com app, it's automatically going to adjust the time for your time zone. But if it's on the website, it's going to be standard to be on the Eastern time unless you adjust the current time on the top. And so but we'll get into more stuff such as like what's going on with the Feds and earnings. But for economic wise, this is kind of what we have for now. And then Wednesday we have the crude oil inventory report. And so in Eastern time, the stock market opens at 9:30 in the morning. So this is telling us that it is scheduled to be released 1 hour after the stock market opens. And typically, the first hour and the last hour of the stock market is the most volatile times of the day anyways. So you'll notice if you're new to doing this type of due diligence, you'll notice that these economic reports and certain things are scheduled for a reason, and the reason is to continue more volatility through the market and more momentum. And so if the stock market starts to lose its momentum and volatility after that 1 hour, we got one economic report 1 hour after the market opens, continuing that momentum and volatility throughout the rest of the morning. And so and then Thursday we have 4 economic reports that are scheduled to be released 1 hour before the stock market opens. So it's a good idea to know, is this going to affect pre-market or is it going to affect after the market opens? So in this case, this is going to be pre-market, where any of the other ones were after the market opened. Now, to try to determine is the day going to be bearish or is it going to be bullish? And a lot of times that answer is in between the forecasts and the previous reports. Now, the crude oil inventory doesn't have a forecast yet, but it will tomorrow morning during pre-market, maybe even tonight. But typically with crude oil inventory levels, those have big swings. So one week things will be low, and the next week things will be high. However, most economic reports, we need these numbers to be up. If they're up, it's positive, it's bullish. But there's 2 reports that the numbers need to be down in order for it to be bullish. If those are up, then that'll be bearish, and that is the crude oil inventory levels and the unemployment initial jobless claims. Because if these are down, that means people are buying gas. They're flying. They're on vacation. They're traveling. They're spending money. That helps the economy. Same thing with the unemployment. If people have jobs, they're spending money. They're paying taxes. That helps the economy. And so these numbers need to be down in order for it to be bullish. Now, with the crude oil inventory levels for Wednesday, it was down, which was bullish. Now that means this week that it should bounce up, which should be bearish. So Wednesday, regarding the economic report that we have here, looks bearish. And so going into Thursday, how we can kind of compare this is by looking to see, is the forecast higher or lower than the previous. That helps determine, is that day going to be bearish or is that day going to be bullish. We can see that the core CPI month over month for October is forecast to be lower than the previous. So that is a red flag or a clue letting us know that it's going to be bearish for that one. Same thing with this one. We have 8.0 versus 8.2 compared to the previous report. However, then this one, which is slightly higher than the previous report, so we have one, and then over here, again with the unemployment report being higher than the previous, that's bearish. So out of the 4, we see 3 bearish economic reports and 1 bullish economic report. So I would imagine that the 3 would overpower that 1, or we could possibly see mixed signals, but I doubt it. Now, as we go more into our due diligence here, I do have to remind you that we still have what's called quantitative tightening. And if you're new to the meeting or new to quantitative tightening, which is also we call it QT for short, what that is the government is selling billions of dollars worth of stocks. Now in 2020, it was the opposite. They call it quantitative easing, and that is or QE. That's where the government was buying stocks. Now they've closed the economy down during the second quarter of 2020. Trying to quarantine everybody. Everybody go home. Let's try to fight this. Blah blah blah. And so, but at the same time, the stock market was plunging like crazy. I mean, circuit breakers were going off the hook. And it was, and at the same time, once the stock market was kind of reaching its bottom, that's when the government started buying stocks. I'm talking billions and billions of dollars worth of stocks, and we called those pop days. And one of our group members that was very, very familiar with that financial system was able to provide us information that stuff has a schedule just like everything else. And the government likes to make it very hard to find this information, but since we are now very well trained on this information and how to utilize it for our advantage, we can now find every time they do it. And so we have the schedule right here for the quantitative tightening. So we know when the government's going to sell stocks, and we know how much in billions of dollars that they're going to sell the stocks. Now, and this has been going on since September. And they've been doing it very aggressively, but we've been seeing it twice per week for the rest of the year. Then it's going to turn into once a week for several months, and then it'll be once every 2 weeks, and then it'll be once a month up until like next summer. And that is when we're going to have a phenomenal bull season. But for now, we're going to have a very extremely bear season, like we've been going through, but we just got a lot more to go. And that is why I highly encourage people to straddle, because straddling is where we can really take advantage of both directions at the same time. And so, but what we're looking here on this page, because the government likes to use the New York, basically the Federal Reserve Bank of New York, and so this is their bank, and so, but they're required to provide this information publicly, but they don't have to tell you, where it is exactly, and that's where it makes it difficult, because it's never in the same page, but it's always on the same website. Now, when these get executed, so let's say this coming Tuesday, October 8th, or November 8th, I'm sorry, we have $4.2 billion worth of stocks that are scheduled to get sold on this Tuesday, and then Thursday, November 10th, we have $12.2 billion worth of stocks that are scheduled to get sold, just trimming the fat off the market. However, we do not know if they're going to execute it during pre-market. We don't know if they're going to execute this order during the middle of the day, or and they could even do it, and they have done it 1 second after the after hours closes, which makes it look like that they never executed it at all that day, but it does affect the next trading day. So we have to know these scenarios, and there's only so many of them. So again, we have pre-market, we got the middle of the day, and then we have that after hours effect, which affects the next trading day. So for example, if they execute selling $4.2 billion on Tuesday after the market closes during after hours, even 1 second before after hours closes, that means it's going to affect Wednesday, November 9th. During pre-market as well as after the market opens. And so it just depends. So we just have to know this stuff so we know what to expect throughout these days. But just know that this is very, very highly valuable information. That's just good to know, and it's best to understand. So if you don't understand, you can unmute your mic. Just let me know, because otherwise, I'm going to assume that it makes sense and you're ready to, take advantage of this. So the next,
hey, Carlos.
Yeah.
Carlos, I have a quick question.
Sure.
This is Chatty. So this makes sense. However, how do you know that it's happening?
So how do we know when it happens? Is usually there will be a significant drop, and usually what we'll see, because the news doesn't just say, hey, this is what's going on, this is quantitative tightening, and that's why the market's been, they blame somebody. They blame the news, whatever's going. They could blame earnings. They can blame, something that, and they wait for the right moment for some kind of bearish, and it could be an economic report, because it's and it could be just the tiniest minor, bearish thing, and then all of a sudden, blam, the whole market is just like down in the red. It's like, that's impossible for that tiny little bit of news to crash the whole market. But that's why the quantitative tightening does it, because that's where they're selling billions of dollars worth of stocks within an instant. And a lot of times you'll see like high market cap stocks like Amazon or Apple or something like that, where you'll see a significant drop that's very, very unusual. That's more than what they normally drop. And it could recover. I mean, selling $4.2 billion is very easily recoverable. We can have all these like hedge fund companies or whatever. They'll just wait, for the bottom or whatever, and they'll start pumping it up and bring it back up. But trying to save the market when they're selling 12 or 13 billion dollars or 18 billion or 20 billion, that's a little harder to do. So hopefully that makes sense. Let's go into so the other thing that's really, really important, because a lot of this stuff we know what's going to happen even in a week in advance or a couple weeks in advance. But one thing that we don't know in advance is the president's schedule or the White House schedule. But there is a website that gives us kind of like a 24-hour notice. So it's definitely something we got to add to our bookmarks, just like all this other stuff, and check it out on a daily basis. Now, the Biden schedule or the president's schedule is updated at midnight at Eastern time, or at 9 p.m. Pacific time. And so that gives the West Coast a little bit more of an advantage, because a lot of the residents will be more awake at that time. So that way we can kind of look and see what time that the president is going to speak, what is he going to deliver, and that way we can determine, is it going to affect the stock market. Now, most of the time when Joe Biden talks, no matter what he's going to say, the market's usually going to be red. And so that gives us an advantage of knowing about approximately what time, and that could usually be an hour or maybe 2 hours before he even talks, or maybe even right during he talks. But because a lot of times that creates uncertainty, the investors want to watch to see what he says, and then they'll buy into it afterwards. And that's why we usually see the market may recover maybe 5 minutes after they start talking, or if it doesn't, it just may be flat and not really do anything. And so that's why it's extremely important to watch this stuff rather than relying on the news, because the news company, all they're doing is doing the exact same thing that we're doing here. We're waiting for the economic reports, we're waiting for the president to talk, or the White House, and then what the news company does is they take that information, they type out a little article, and then they blast it out. And by that time, it could be it's too late. That is a disadvantage. We need to be up to date with the information as it happens. And so, and this is how we do it. And so we're always looking for the president delivers. That way it gives us, what is he delivering? And sometimes it doesn't say, but in this case on Friday, it was regarding it was at the American Technology Company to benefit the passage of the United States CHIPS and Science Act and blah, 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 whatnot. But then we have, and then it's important to look for, any press briefings, because regarding any press briefings, it's usually at the White House. We have journalists that ask questions. Now, the White House may want to talk about something. They may want to talk about the whole, that college, loan, forgiveness thing, or whatever, or whatever. But then when they start letting journalists ask questions, we got to think, if you are a journalist, what are you going to ask the White House? They're going to start asking them what's going on with China, what's going on with Russia and North Korea, blah, blah, blah. These questions scare investors in Wall Street. And they start, if they start answering questions to the point where investors don't want to hear, that could create uncertainty, or they may scare them, and there could be a little sell-off or something. That's why it's important that we that we know when these are going to happen. And how we can tune into these is, all you do is you go to YouTube, type in Biden Live or Joe Biden Live, or White House live, and then all of a sudden you'll find several news sources that will say live on there. Maybe even you want to try looking at about 15 minutes before it's scheduled, and a lot of times you'll see maybe the camera's on, it's live, we can kind of hear the reporters talking or chattering and whatnot, or maybe it's just saying stay tuned, this will be popping up here at that time. And a lot of times, sometimes this stuff can happen sooner, earlier, or sometimes even later. And so but we just have to be on our game with this stuff, because it is extremely important. And these are basically, professional trading characteristics. And it's important that we always maintain that, and not an amateur trading characteristics. And so because we are pro traders, this is what we do. This is part of our process. And so the next bit of information that we need to look at is let me see here. There is, let me see here. So in our featured areas, I always post a lot of things that have to do with the stock market, and the earnings is another huge week this week. So we'll start here. And so under our featured area, or our announcements area, is kind of like my bookmarks. When I created the group about 4 years ago or so, it was just a process that I did all the time, just uploading things, mostly for my reference. That way it was like the cloud. I had an area where I can save things and get to it later, but allowing you guys to look at what I was saving. And so, but it started to form a process, like a scheduled process that's very consistent, and I've always been doing this, and it's always been the same, so it's consistent. So that way you guys can always come back to this section for your benefit. And so this is the most anticipated earning releases for this week. So we got a lot of big names like Palantir Technologies, BioNTech. We have Norwegian Cruise Line, Workhorse. There's a Disney, Oxy, AMC, Upstart on Tuesday. I mean, there's just a lot of huge names this week. And a lot of them is going to have a huge influence on even many different segments of the stock market. So NEO, which is very popular. A lot of people, are holding shares on the NEO, but it's very interesting because with the whole chip shortage and whatnot, it's very interesting to see, where NEO is going to head, in the future. But we do see that NEO just posted this the other day. In October, NEO delivered over 10,000 vehicles, which is a 32% increase year over year from January to October. So that's great for NEO. Our NEO is scheduled to release their earnings report on Thursday morning before the stock market opens. That is on November 10th. The company's earning release has a 49% expecting an earnings beat, which is slightly below average. Option traders are investors are just not exactly sure, which direction that this can go. However, option traders are pricing in a 14% price movement in either direction. It's either up or down, which may be a great stock earnings to straddle as a lottery play. And again, a lottery play, which we mentioned before in the past, is a high risk play, or a situation where we want to invest light. We don't ever want to go heavy in a lottery play because there's too much risk. A lottery play could not work out. So just like we putting money into the Powerball, nobody's winning the Powerball. I've seen people dump hundreds or thousands of dollars into the Powerball. Nobody's won it, and so. But it's just like buying a lottery ticket. If you don't win, it's money lost that you're not going to worry about. So the same thing with a earnings, because because we could be affected by what's called IV crush, or implied volatility crush. And that is where a particular type of news like this can affect both the calls and the puts. So for example, let's say NEO doesn't move anywhere. It's at 0% after the earnings, and it will devalue both your calls and puts, betting the stock goes up and betting the stock goes down. So whether you're betting one or the other, or you're straddling, and that is why it's very important when we're straddling that we straddle the top 5 or top 3 most actively traded stock options. And that's pretty much going to be our Amazon, our Apple, and our Tesla. But these are great for lottery plays, just to throw a little bit of money onto something, whether it's in a particular direction or going both directions. And so in this case, I would recommend, as a lottery play, do a straddle, because again, the 49%, it's a 50-50 in either direction. But this movement for straddling is very, very attractive, and that could be very, very beneficial. For Upstart is scheduled to release their earnings report on Tuesday after the stock market closes on November 8th. The company's earnings release has a 21% expecting an earnings beat. However, option traders are pricing in around a 22.8% price movement. Now, what is the opposite of 21%? That is 79% expecting an earnings miss. That is 79%. Meaning where a put is in your favor by 79%, where a call is 21% in your favor. So either way, even if you straddle, if it does reach 22% in either direction, it's a no-brainer. That's a win-win. That is going to be a very, very nice lottery play. And so just make sure that is on your watch list for this week. And then AMC is another one that is based on one of those manipulated stocks like GameStop. And so, but there's usually a lot of volume in this, a lot of volatility. And so AMC is scheduled to release their earnings report on Tuesday after the stock market closes on November 8th. The company's earnings release has a 51% expecting an earnings beat. However, option traders are pricing in a 16% price movement in either direction. So another good-looking one for straddling. Roblox is another very popular game for young kids and young adults. However, Roblox is scheduled to release their earnings on Wednesday after the stock market closes, and that would be on November 9th. The company's earnings release has a 31% expecting an earnings beat, just like any other kids game or whatnot. They come, they go, and there's another. Remember what was it? Club Penguin. We had Minecraft, Roblox, Fortnite, blah blah blah. And there's always a new one right around the corner, and so. And usually we see high percentages when they're fresh, but when they start aging like this, they start trying to reinvent it, blah blah blah, trying to make it better. But these percentages, they just keep getting lower and lower and lower. However, option traders are pricing in around a 15.9% price movement in either direction. But most likely, according to this, it's with a 69% possibility it's going to be in the downwards direction. And so make sure that one's on your watch list as well. Trade Desk is scheduled to release their earnings on Wednesday morning before the stock market opens. The company earnings release has a 61% expecting an earnings beat. Now, average is around 65%. Anything above that is considered above average. Anything below 65% is considered below average. And most of the things we've seen have been pretty below average, but this one is right around that, which is not bad. Option traders are pricing in some major volatility with this one, though, at 18.3% in either direction. So lots of volatility. Great opportunities this week, guys. BioNTech has been very affiliated with Pfizer, and so they are scheduled to release their earnings tomorrow morning before the stock market opens. So that's Monday, November 7th. The company's earnings release has a 26% expecting an earnings beat. Oh, boo-hoo. And however, option traders are pricing in a decent amount of volatility with this one, around 10%, where usually it moves around 5 or even 7% in the past. So we're expecting a little bit more volatility with this one as their business has slowed down every quarter. And so next one is the Norwegian Cruise Line. And I put this on here because a picture can say a thousand words, and so this has been one of their things that they've been working on for quite a while now, and so we'll have to see how it went for them. However, Norwegian Cruise Line is scheduled to release their earnings on Tuesday morning on November 8th before the stock market opens. The company's earnings release has a 54% expecting an earnings beat. How people are going to be watching them like a hawk because option traders are pricing in around a 10% price movement in either direction, where normally it moves half of that. Oxy, oil is a huge thing. Have you guys seen the price of oil or what it's done lately? It's just going up. And so Occidental Petroleum is scheduled to release their earnings report on Tuesday after the stock market closes. Out of all the companies, this one has an 86% expecting an earnings beat, which holds the highest percentage than any other earnings company this week. Option traders are pricing in around a 6.5% price movement in either direction, where normally it moves about half of that. Disney, that's a huge one, a huge market cap stock. They are scheduled to release their earnings report on Tuesday after the stock market closes on November 8th. This company earnings release has a 74% expecting an earnings beat, which is considered above average. Option traders are pricing in around a 7.5% price movement in either direction, where normally it moves around 3% or even 4%. And so this is going to be huge because there's been a lot of talk with the Disney theme parks having issues. Disney has released a lot of things like the some Star Wars series, Marvels and whatnot, and some other movies. We had that Buzz Lightyear movie or whatnot, and I think a few other things. So Disney Plus, all it does is accumulate more subscribers. And so, especially if they start leaving like Netflix or something like that, a lot of people are paying $15-20 a month. I'm paying I think $20 a month for the 4K, and so I can easily see where people can get discouraged to leave that and go with other things that are $5 here and there. And so it's a lot of people are going to be watching Disney. And we can always trade the volatility even before or even after the earnings. We don't always have to, play it as a lottery play throughout the earnings, but we can definitely do the before and after. Last but not least is the Palantir Technologies. They are scheduled to release their earnings tomorrow morning before the stock market opens on Monday, November 7th. And so this is a major company that will have some pretty big effects on the majority of the stock market, because they are a huge market cap stock. And however, the company's earnings release has a 36% expecting an earnings beat, which is definitely way below average. So option traders are pricing in around a 15.5% price movement in either direction, where normally it's been pretty volatile in the last several earnings, as they've been kind of trending in the downwards direction. And so, but we've also been able to offer what to watch for the week ahead. So it just kind of summarizes, some things here regarding earnings, but also other events that are taking place for these certain days, just like the earnings calendar. But this is a combination of three things. Like I said, we have our earnings, we have other business events, and we have federal events. And so Monday, they're talking earnings pretty much with some of these other stocks that we talked about, as well as some other things like for Ford Motor Company, for example. It says option trading volume is elevated due to the companies participating at the Bernstein's 6th Electric Revolution conference. So it says expect price movement maybe around more or less 5% by the end of it says by basically the end of this week. And so that is an event to consider, and if it affects one stock, it may affect another one that's similar to that industry. And so G-Lead option trading volume is elevated due to the companies presenting data on the AASLD, the liver meeting. and then we have more earnings on Lyft. And what affects Lyft will affect Uber. What affects Uber will affect Lyft. And so it's always good to know what the other stock is that will be affected. And so Tuesday says high impact news. Holding positions and or opening any new positions during this time can be risky. Bring it on, because we straddle, we eat risk for breakfast because we want that volatility. The more volatility, the more beneficial that it'll be for us. Because when it comes to straddling, if you don't know what straddling is, that's basically when we're holding calls and puts on the same stock option. Now we can only lose what we have on one side, but our gains on the other side are potentially unlimited. And so we can always go into the day, whether it surges straight up in the green or plunges straight down in the red, it's a win-win either way, as long as we're following certain basic guidelines that help protect us and help maintain consistent gains. And those rules, we're always posting repeatedly throughout the group as a reminder. And so it says all day, the 2022 congressional midterm elections will be held. Markets tend to trade sideways during midterms due to legislative uncertainty. That is a key word there, you guys, uncertainty. Anytime there's uncertainty in anything that has to do with the stock market, that is very, very bearish. That is definitely not bullish. We either see bearish characteristics or the market may be sideways because it's waiting. It's waiting to see what happens. Now, keep in mind that in a normal world with an election like this, we should have the results, that day. But we're not in a normal world anymore, and the election could drag out. They could do something to manipulate the election or do something to delay it for their advantage, just like they did last time during the presidential election. And so it is possible that it could drag out for a day or a couple days. Who knows? We do not know, and that is uncertainty. And so I would definitely expect bearish characteristics, because when it comes to the stock market and a lot of investors, you can't bullshit a bullshitter. And we know kind of what they're doing. We know that they're up to something, and the investors in Wall Street are the same. And so that just could create just a lot of bearish characteristics, especially with the Tuesday we saw that the economic report, they were just focusing on the short-term energy outlook, and so that could provide some bearish characteristics too, because energy is a very, very sensitive subject. And so so it says markets tend to trade sideways, blah blah. However, they typically rally in the following months. So basically, not within the following months, but once the uncertainty is done and over with, and investors don't have to stress, that's when we'll see a kind of a temporary shift from all this bearish characteristics. We're going to see a potential rally, you guys. We're going to see a lot of green. The market is going to try to recover as quickly as it can with a short period of time before we start getting into like December, because December there's a lot of bearish events that are scheduled to happen on December. It's the last month of the fourth quarter. It's the last month of the year. It's there's just a lot of and we have triple witching day, which is an event that happens only 4 times a year. It's very bearish. And so but I would November should, after the election, as long as there isn't any major complications, we should be, like I said, we should be in a temporary bull mode for a couple weeks. This is saying a couple months. I don't think so. Like I said, I would say at least probably 30 days, maybe, at that, maybe a little bit more. But like I said, by mid-December, because the triple witching day is the third Friday of at the last month of every quarter, so meaning December. And so that's when it really triggers the full-on bear season as we go into the winter season. Winter is coming, you guys. It's just right around the corner. Do not let this rally fool you. It'll just provide more opportunities for people that will want to buy puts, because puts right now, people are focusing more on calls rather than puts, for kind of like the short period of time. But like I said, always recommend straddling on a daily basis. Always be actively trading, not actively holding. And so look out for compelling entry points, particularly in the sectors that are set to benefit from the $370 billion spending from the Inflation Reduction Act, namely clean energy, defense, and select industries. So again, Tuesday, lots of volatility, and so other ones like Zoom option trading volume is elevated due to the company's investor day of Zoomtopia of 2022. Expected price movement of around 8% by the end of this week. Google option trading volume is elevated due to the company's chief internet something or other, church, I don't know, giving the keynote at the IEIC Global NAP Summit 2.0. So expect good amount of price movement out of Google, around 4.5% by the end of this week. Then we went over to see these guys. Oki Data is option trading volume on Wednesday is elevated due to it's hosting its Oki Ocane 22 keynote at the Investor Day event. Expect price movements around 10% by the end of the week. Rivian is going to have earnings, so that is going to affect the electric vehicle segment. So that Rivian can easily affect Tesla. It can affect probably NIO, maybe even affect Lucid, and so it's very important to pay very close attention to any kind of electric vehicle stock with their news, because they can affect each other. And so, but we do expect a 12% price movement by the end of the week with Rivian. And so very, very important. Then there's Rocket Lab. We have expecting a price movement on Wednesday of 14% by the end of the week. Unity, they have earnings as well. It looks like they're expected to be a big movement as well at 17%. Beyond Meats. Now, I remember when Beyond Meats was first listed in the stock market. It was like the next best thing to sliced bread, and I mean it was so pumped up, it was ridiculous. And all of a sudden they started getting deals from like Taco Bell, Burger King, and all these grocery stores and stuff. It was like wow, and they were just one of the major kind of a meatless meats. And so there's an artificial meat. Made by vegetables and soy and whatnot. And it's all made by science. And however, I don't think they've been doing very well lately. And so, but we do see that out of the earnings that we are expected to see a price movement around 20%. That is huge. 20%. That is, like I said, as a lottery play, that is absolutely worth straddling. Going into Thursday, we have another a government impact. It says holding positions, opening any new positions during this time will be risky. Blah blah blah. CPI report for October. Okay, so that's talking about the CPI reports for the economic report. So that was what we were already talking about. And that's how we can kind of determine is it going to be bearish or is it going to be bullish. We figured that it is mostly going to be bearish because most of the economic reports, out of the 3 of them look bearish. Only one of them look bullish, and that's this one. And so, but this is saying this release is particularly significant with inflation near record highs. Despite several interest rate hikes this year, the CPI has stayed above 8% since February. September's index indicated that the inflation remained up 8.2% year over year. Increases in the price of shelter, food, and medical care were the biggest contributors. And so so just know that, these, and then some other big names for earnings is the Six Flags. Looks like they're expected to release their earnings on Thursday with expecting a price movement around 14%. Then we have this one here. What is Iovance? Looks like it's some kind of biotherapeutic. Usually. So these usually don't do very well, but option trading volume is elevated due to the companies presenting a clinical data for this tumor in whatever this is here. However, this could be big. If there are some good results out of this, this biotherapeutics, we could easily see some huge price movements in either direction. And this is saying that it's expecting 25% price movement in either direction. And so next on Thursday is AMD. AMD, it says option traders are trading volume is elevated due to the company's hosting its Together We Advanced Data Centers event. Expect price movement around 6.5%. And what affects AMD usually may affect NVIDIA or other semiconductor companies. And then on Friday, it looks like we have some University of Michigan event. It says that it has some kind of consumer sentiment index will be reported. Consumer optimism is directly related to the consumer spending, which makes up a large part of the country's economic activity. Consumer sentiment can be foreshadowed, turning points in the economy. This bi-monthly survey gauges consumer attitudes on their financial and income situations. Consumer spending accounts for more than 2/3 of the economy, which is huge. So the markets are always interested in consumers are up to and how they might behave in the near future. The Fed particularly cares about what the public thinks inflation will look like in the future. This is because the actual inflation and inflation expectations can create a negative feedback loop, which can cause a wage price spiral. If left unchecked, it can lead out of control hyperinflation. So to inform their interest rate decisions, the Fed keeps an eye on the public perception of inflation expectations, especially if reported by this survey. A higher than expected reading should be taken as a bullish for the US dollar, while a lower than expected reading should be taken as a bearish for the US dollar. And so last but not least on this page, looks like we have, I'm not familiar with this one, but this bottom right one here is an option trading volume is elevated due to the companies presenting data on the Society for Immunotherapy of Cancer, a 37th annual meeting. Expect price movement around 18% in either direction. So we have a busy week ahead of us. But if we want to try to keep things simple, we can really avoid a lot of this, and just like I said, we can just straddle the same stock over and over and over again. And so let's look into stock options really quick. So we have we like to utilize barchart.com for a lot of that. And so if we click on the options on the website, it brings the options menu down. We want to see the most active options. Now, as we're doing our due diligence on this throughout the weekend, this is going to pull basically Friday's options activity. So, but we can look at this as a way to see what it was like, but also it gives us some clues of what investors feel like Monday morning will be like. For example, so this is the top 3 stock options. So each one has 2 to 3 million in options volume for last Friday, which is huge. Now the 4th place was less than 1 million. And so investors focus on the top 3 for a good reason, because they hold their values very well. They're decently, they got lots of volatility in the options world. They may not have a lot of volatility in the regular shares world for the stocks, but they do have massive amount of volatility in the options world. And so plus they're very predictable. You can see the moving averages, like on the graphs, they move very slowly, so we can identify buying and selling signals a lot easier than if we would anything else, or like a penny stock or something. Those are just too volatile. And because there's a lot more volume and interest on these, it holds their value better, meaning where there's a lot less time depreciation or time decay. And so that is why the majority of investors always straddle or day trade the top 3 most highly active stock options, and that is always going to be our Tesla, Apple, and Amazon. Now, out of those, we'll have different priorities. My priority is my primaries is always Amazon, meaning I'm very heavy on that one, and then Apple is my secondary. So I go second heavy on that one, and then Tesla would be third if I want to do 3. Because if we're straddling, we have calls and puts on the same stock option. So we have 2 sides we have to delegate. And as part of our rules and guidelines for straddling, is that we want to try to buy 5, 10, maybe 15 minutes before the stock market closes. It all depends on how quickly you can get these executed. If you're very quick, you probably want to do it within 5 minutes. But if you're stumbling with your platform and just need more time, give yourself more time. Make sure you have those calls and puts executed and in place before the stock market closes. And so one of our other rules and guidelines is to always follow the money. So this is obviously, here's the top 3. That's where most of the money's going. But we can see out of the calls and puts ratio, we see that the Tesla has about just right around 54% puts and about 46% calls. So I still like to round that to the nearest number. So I still look at this as 50-50. So just like Apple's still 50-50. Amazon is basically 50-50. So that is telling us before we straddle, have that 50-50 ratio, because it could be different. What if the calls had 60% calls and the puts were 40% puts? That means, again, always follow the money. That means have 60% of your ratio calls, and then the 40% ratio should be puts. So what does that mean exactly? How can we configure that? So that means that that you would have 6 calls on Apple or Amazon and 4 puts on Apple and Amazon or whatever. Or if you can't get that many, then we cut that in half. That means you have 3 calls on Amazon and 2 puts on Amazon, or whatever that you're going for. So that's how we can kind of lean more towards on one side, because the investors in the market may be more bullish going into the next trading day. And a lot of times we can get that information from the stock options, not the ETFs. The ETFs are more day traders, because the expirations on the ETFs have 3 expiration dates per week, versus stock options have 1 expiration date, and it's every Friday. So we can get some good information from this data going into the next trading day. So for example, even though this was Friday right before close, we can see that the investors going into Monday are going 50-50. They're not taking any chances, whether it's going to be bearish or bullish, because of the uncertainty. When they are uncertain, they go 50-50 every time. And so because we could have weekend news, we could there could be World War III. I mean, who knows? I think Kim Jong-un has launched more missiles. I mean, there could be a lot more bullish news that may have an impact on Monday morning. And so but we can see what people are doing. Now, this website updates this information every 15 minutes after the stock market opens. After the first hour is when we want to start looking into this. Refresh the page every 15 minutes, and we can kind of see what people are doing. And this is great information for this page. It gives us a really good list of what's going on. When we're looking at it daily, we memorize what's here and what's not normally on here. So, but when we find something that's not normally on here, it could be here on the bottom of the list, and throughout the day, all of a sudden it trickles up the list. It's like, what is going on? It's flying underneath the radar. Something is going on, just like with what happened with GameStop, for example. GameStop has always been like a $3, $4, $5 stock, and back in when that took off, it did the exact same thing. It was under the radar, it was flying up to the top before it reached the news, before it started to surge. And so this is our radar. We can see what's happening, even though if it hasn't reached the news yet. And so, but anytime we do something, we have anything other than our three primaries, it must be considered a lottery play. So do not go heavy on that, because it's all about consistency. Well, we need to be consistent on our primary straddling strategy on the top three. And so, but like I said, we can find some other bits of information and maybe some pretty whacked out ratios, like 60 or 71.7% calls. I mean, NEO was up significantly, just the other day. And so part of my reasoning for the straddling is because you can only lose what you have on one side, but your gains on the other side are potentially unlimited. So with NEO being up that high, we can see exactly how much volatility that it had on each side during that day. And using the NASDAQ website, I like to use that to pull the most active calls and puts for the individual stock option. So this is for NEO for Friday, and some of these may be expired, and that's why we'll see like a lot of the puts are down like 99%, because you can only lose what you have on one side, but your gains on the other side are potentially unlimited. So there's a spot right here. A $10 call for NEO is up 911%. 900%. Again, you can only lose what you have on one side, but your gains are potentially unlimited on the other side. Oh, here, look at this, 2,000, almost 3,000% gain for this $10.50 call. And I mean, it happens all the time. There's a 3,250% gain in one day. And so, and that is why it's important that we always straddle, because it just doesn't matter if the stock market surges or plunges. It's a win-win as long as we stay with our rules and our guidelines to make sure that we're doing it, safely and correctly. And so, but going back to the barchart.com website, other than the options menu, most active options, we can also venture into the options volume leaders. Now that will provide us the most active individual calls and puts out of the entire system. But it's important when we're looking at this that we also know the expiration date and the DTE, which is the total number of days until the option expires. As we're looking at individual most active calls and puts throughout the weekend, we want to make sure we're avoiding anything that has zero there, because it's expired. It doesn't exist anymore going into next week. However, PBR, which is one of those Brazilian oil companies, is up to $12.65, but we have a $12 put right here, and then we have a $14 put right here for some reason. We have a $13 put. So these are the top three that are currently most active stock options that haven't expired yet. But we can see that there's a lot of open interest on them, and there's a lot of volume. Now, if you're new to options and just not sure what, because I mean, volume is the current day's buying and selling activity. It always resets back to zero at the next trading day. But open interest, which is the total number of open contracts that have been traded but not yet liquidated via offsetting trades, meaning that these options were bought but have not been sold yet prior to the current trading days. But we can see that the open interest on this was currently at 149,000, and then the current volume is 108,000. Because it has not exceeded over the open interest, to me, it's telling me I think people are selling it. They're dumping it, they're getting rid of it, maybe they're securing their gains or whatever, or maybe they're trying to, maybe it's a stop loss. Who knows, unless we do, further investigating it. But the volume has not exceeded over any of these of the open interest, and so on these. So that is kind of like a red flag. You know, to me, again, I think investors are dumping it. They're getting rid of it. So, but we can go down the list and see if there's anything else. And there's two. We have a WBD. I'm not sure what that one is, but it's currently at $10.43. But we have a $12.50 put that expires next January 20th, which is approximately 76 days from now. We have 81,000 in open interest, but 51,000 in volume. So that's a good amount of activity. But again, we don't know, is that buying activity or is that selling activity? It's always good to see the volume exceed over the open interest, because that's showing unusual buying activity because it's higher than the open interest. It's adding more interest. And then the other one is a Tesla put. Looks like we have a $200 Tesla put going into this week. Tesla is currently at $207.47. We have an open interest of 10,408 and a volume that exceeds that. So it looks like people are, this was a very popular put going into this next following week. Now, there's a little trick that we can do here from this page. Now, when we go to the volume or the options volume leaders, it always sorts it out by volume. But let's sort it out by open interest. So if I click there, it sorts the current page. But if we click the refresh button on the browser, it refreshes the entire system. So that way it shows everything with the highest open interest. And so you'll notice that the expiration dates are much longer, because these option traders like to hold longer, because they're not day traders. They don't have the time to look and stare at the screen all day long like some of us can. And but they have to be, they want to participate still, but they have to participate in a longer expiration date, so that way they can get in this week and get out maybe in a couple weeks from now or whatever. And so, but we see that American Airlines is right here, number one with the highest open interest. And have you seen the news on American Airlines, or just the airline industry? The pilots are on strike, and that's crazy. I mean, not only is there a pilot shortage, but I mean, that industry looks like it's a big mess right now. But investors are betting against the airline industry, and primarily betting against American Airlines. But this $10 put strike price expires this coming January 20th, which is approximately 76 days from now. Even though it has a very small amount of volume, most likely it's probably accumulating into the open interest. So going into tomorrow, we could easily see that this open interest may have gained 5,000 more interest. So to be determined though. PBR, we already talked about that. To me, it looks like they're dumping it. So refreshing this tomorrow, the open interest, most likely these PBRs will probably be gone. I'd be very surprised if these two accumulated and added over 200,000 in open interest. That would be crazy, which I don't think I've ever seen open interest quite that high. But again, with my experience, it just looks like that they're dumping it. And then going into the next one, we have Bank of America, or BAC. We have a $40 call strike price. Bank of America is currently at $36.79, but we have the $40 call that expires next January the 20th, which is approximately 76 days from now. Has a very large amount of open interest and is slowly accumulating more interest. Starbucks. We have Starbucks here, which is currently at $91.86, but we have a $110 call strike price that expires next year of March 17th, which is approximately 132 days from now. We have 122,000 in open interest and a slow amount of continuing interest through its volume. Then we have, let's see here. Got more PBR there, put there. Ford Motor Company. Now, we were just talking about Ford Motor Company, you guys, through that other calendar. Let me show you here in case you missed it. But we see that the Ford, what was it? Where was Ford? Where did we see Ford? Or here, yeah. So the option trading volume is elevated due to the companies participating at the Bernstein's 6th Electric Revolution Conference. Expect price movements around 5% by the end of the week. And so So we see a little clue right here, you guys, 15% call. So if Ford Motor Company isn't quite, if it's not quite, what's doing what it's supposed to be doing by tomorrow morning, that may be a good opportunity to day trade that. So as tomorrow morning, as we get more into, as we're more into pre-market, we'll look at the pre-market activity, and all of a sudden we'll see Ford will probably be on the top or top half of the most active pre-market stocks. And so that's just, we're putting a lot of the pieces of puzzle together for this week. And one of the other things that the pro traders say is to always plan our trades and trade our plan. Just like what Benjamin Franklin said once, is if we fail to plan, we're planning to fail. And so that's not us, you guys. We're always planners, we're always trading. And so Ford looks like we have some activity going here, going into next week. And then some other ones, we got Nokia, more Bank of America, more PBR, more Bank of America, Sirius Satellite Radio. Looks like we have some accumulation there. And so, but like I said, this is just great, highly valuable information that you guys can kind of dig in yourself and explore. But these two areas are pretty much our primary areas that we want to look for when it comes to activity. But we can also look at other things. There is a straddle and a strangle section here. It says short, long, it don't matter. Just click on them, all four of them. Now the difference between a straddle versus a strangle, both of them are the same concept. You're betting a stock, you're betting a particular stock goes up and down at the same time. But a straddle is picking the same strike price, versus a strangle are picking different strike prices. Maybe one strike price is maybe the call is $1 higher versus the put is $1 lower, or 50 cents or whatever. It's important that you do keep it even, and that way the volatility is even, the dollar amount is pretty even, the time depreciation is about even, and so very, very important. But as we're we're investigating and doing our due diligence on straddling activity, what we're looking here for is multiple of the same stocks, because that just shows more unusual straddling activity on that particular stock option. So when you start from the top of the list, you just work your way down, and again, we're looking for multiple of the same ones, whether it be 2, 3, 4, 5, 6, or 8, whatever. I don't really see a lot of the same stuff, or even multiple of the same. I see 2 AMDs. There's an AMD there, another one there, and just kind of work your way on the top, work your way down, and see if you see anything. So I do see some straddling activity there on AMD, and again, we did see AMD here on Thursday is expected to elevate its volume due to the company it's hosting its Together as we advance data centers. And so and as well as what was the other thing for semiconductors? There was earnings or something. There was something else, but let's see, we'll continue going down the list here. We got Walmart there, Tesla, we got a couple Teslas there. What else here? Yeah, it looks like we got some Teslas. I'm not really seeing anything else, so we'll go to the third page, see what we can find there. We got a Bed Bath & Beyond, we got a 2 there. Let's see, Peloton, anything else? Verizon, we got a couple there, but just not like a significant amount of stuff. I like to see things more than 2. Like I said, I want to see like 3, 4, 5, 6 of the same ones. Then the last one, Long Strangle, kind of go down the list there. We've got Amazon. We've got 4 Amazons right there. And again, Amazon is one of our top strangle stock options that we always go heavy on, just like Apple or Tesla. But my personal preference to always go heavy on is Amazon, and then secondary is Apple. And so again, we can see that other investors feel the same way. And so that's why it's important to always follow the money, do what they're doing, and because if they're successful, if you do the same thing, you will as well. And so the more you learn, again, the more you're going to earn. And so it's just going to help make you better, and that way, This is gonna change your life forever if you're not already doing this. Anybody have any questions or want to bring anything to the table? If you don't have any questions, well, feel free to unmute your mic if you need to. Yeah.
I have a question.
Sure.
Actually, worse and Bed Bath and Beyond. Bed Bath and Beyond you mentioned times during the month, like you think it's going to go up by December or January. So can you tell us more and why the stock is dropping like more than 10% and there is more bad news? They don't have inventory for the holiday season. So what's your expectation? Because I own like 25,000 shares. And then Workhorse, what's your expectations?
Well, with Workhorse, what wasn't it on here? Let me see. Where did we see Workhorse at? Oh, was that on? Hold on here. We saw Workhorse somewhere. Where did we see that at?
So when the earnings do, so I think it's the earnings.
Yeah. And so, but yeah, so that could easily affect that could easily affect the. Oh, I remember where we saw that at. We saw that on the other calendar. I don't have any. I don't have an analysis on it, but I do know that it will affect other. Electric vehicle companies, and so rather than having, because like I said, they're a penny stock. We don't want to really trade stock options on penny stocks. It's just way too risky. There's very little volume. There's a lot of time depreciation, so it's just usually best to avoid it. However, it will affect other electric vehicle companies' stocks. Like NIO or Tesla, Rivian, Lucid. These are other ones that we can trade because or straddle because they will be affected by Workhorse. And so, I mean, Workhorse has a lot of more growth to do, and so they're just such a baby company, and they've had so many issues and roadblocks and whatnot. So. Yeah, it's just not. But yeah, I would focus on the other electric vehicle companies, but to keep that one on your watch list because, like I said, it's going to affect other ones that'll be pretty major. For the Bed Bath and Beyond, we used to see, and we do periodically see that it has a lot of open interest. For some reason, though, we're not seeing it right now. Which means that they may have temporarily dumped it for now because maybe they're waiting to get back in. It has been a very highly manipulated stock option and a stock. I mean, Bed Bath & Beyond used to be like a $30-$40 stock, and it's significantly down. It's been significantly manipulated. We had this CFO that committed suicide a couple months ago, and the company, doesn't really do well, throughout the spring and summertime anyway. Bed Bath & Beyond does very, very well during the fourth quarter, during the holidays, because we have Black Friday, we have Christmas, we have Thanksgiving, and we have weddings and all kinds of things. So this is Bed Bath & Beyond's prime time. This is their best quarter, is the fourth quarter. So I believe what we were seeing is that we were seeing Bed Bath & Beyond expiration date for like January. I think we were seeing this January 20th expiration date, like the majority of the ones that we were seeing here. So we may have to look more into that. We may have to do that using the NASDAQ website. That way we can pull up its most active individual calls and puts. And so we may need to get more, information what's going on there. I mean, currently it was down, hardly anything the other day, 1% or down to $3.98. But we're seeing a good amount of both calls and puts on here. But we do see a high open interest here, 139,000. Let me see if that is expired or not. I don't know why. January 20th. which is interesting. Why is it not showing on here? It should be what? It should be right here. And so, possible glitch, maybe. I mean, who knows? But it's showing that there is a lot of open interest on this. So people are accumulating. They're either selling it or buying more. And it's only what, $9 a piece for an $80 call. Very inexpensive, and but it looks like it went down. That would be considered 10% on Friday, because it didn't really do anything. I mean, it was down 1%, so that the call was down 10% because of that. But the puts are up. You know, we got 4%, 26%, 14%, 33%, just from that slide. But these are most likely going to be shorter expiration dates. But we do see, like I said, a huge amount of accumulation of this open interest on this $80 call. We even have a $50 call strike price right here. Not a huge open interest or anything, but like I said, there's something going on with Bed Bath & Beyond. And every once in a while, it shows up on the highest open interest list, and sometimes it doesn't. But like I said, it is a very, very well manipulated stock that hasn't quite hit the news yet. I mean, it did a couple times there, but just barely. But it just seems like it's preparing for something more. And whether you're holding shares, which is probably, you know, a good idea to do, just in case if this continues to get manipulated. But if you're holding shares at $4 a piece and it gets to $8, you just doubled your gains. Or even if it gets to back to $30 a share, I mean, you just gained what, like 800 or 700% or something like that. And so, I mean, that's a huge gain just for holding its calls. So, but and the reason why, you know, we're seeing this kind of expiration date in January is because it's a new earnings season. They're going to start talking about the fourth quarter earnings and how well or how bad Bed Bath & Beyond did. But most likely, like I said, the fourth quarter is Bed Bath & Beyond's prime time. And usually that's when they'll say, oh, this was our best quarter of the year, blah, 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 and we should see it, you know, surge up from that. But we also talked about earlier today how December is usually a very bearish month anyways. And as we get into January, investors are going to be like, oh man, I'm glad that year is over with. Now let's focus on the new year, new quarter, new earnings season, you know, this and that. And hopefully we may, well, I don't think we're going to see quantitative easing until 2024. But at least we should start seeing the interest rate hikes starting to cool down, as well as the quantitative tightening will start to cool down. So investors will kind of start to see the light at the end of the tunnel. It's going to be a very small amount of light, but they'll be able to kind of see a little bit of it at the end of the tunnel. And that may kind of spark you know, a lot of stocks to go up in January. Any other questions, or everything makes sense so far?
Yes. Carlos, I got a question for you. I think a lot of us straddled Amazon on Friday. Do you mind opening Webull on Amazon? I want to try to understand your thought process based on the information, because we have a lot of information. I was looking at Amazon on the 1 minute chart. So pre-market, we had a decent-sized aftermarket and pre-market, having our calls deep in the green. The 1 minute EMA on Amazon has been an uptrend since 8:36 a.m. and the price is above EM. Same as the 5 minute EMA, uptrend since 8:45 a.m. and the price had just hit the EMA. Now the morning reports that we had indicated a bullish open. So I dropped my put immediately, but I seem to understand that you hold your put longer, and and I was wondering what made your order longer. And looking at the data again, I'm wondering, is it the MACD? Because the 1 minute and 5 minute MACD, the 1 minute MACD was in downtrend before open, but very flat, and the 5 minute MACD was starting to show signs of reversal. So should those have been my triggers to hold those puts more than a minute?
And it's always important to make sure we have our 1 minute graph up and our 5 minute graph. And sometimes they can provide us a signal during pre-market, even though with the stock options we can't do anything during pre-market or after hours, but it can still provide us a signal what to do after the market opens. So looking at the chart here, on the left side is our 1 minute graph, and the one on the right side is our 5 minute graph. The 5 minute graph is a little choppy, but it's basically kind of saying focus more on the 1 minute graph. And we're like, okay, so what happens is we start to zoom in, which I highly recommend zooming in. Don't do this where you can barely see anything. It's important that everything is as crystal clear as possible, which is another reason why I use lines, because candles kind of distort it. There's just too much going on. It's interfering with the lines. I can't see a clear picture. And that's why I use lines, because now I can easily see crystal clear what's going on. So the stock market opens. So part of our rules is to always buy our straddles before the market closes. So 5, 10, 15 minutes before the market closes. So we have both our calls and puts. So it doesn't matter what the stock market does. We depend on the signals, the buying and selling signals of when to get in and when to get out. Now, as we're holding on to our calls and puts going into the next morning, we have to decide when should we sell and when should we buy. Now, going into the morning with both calls and puts, obviously we want to figure out how to maximize our gains on one side and how to minimize our losses on the other side. And that's because we can now sell at different times to maximize our gains on one side and minimize our losses. Or if you just can't utilize moving averages, then that means that you can sell at the same time. But part of our rules and guidelines is you want to do that within the first hour, because if after the first hour, most likely if the stock hasn't moved anywhere, it's probably not going to move anywhere at all unless we're waiting for economic reports. And then that way we have to decide, is the market going up? Now, that way we can figure out when to sell. But if we continue holding beyond that first hour, we may experience more time depreciation on both sides because there's nothing going on. So we want to try to get in or get out when we can. So the 1 minute graph, as part of our buying and selling signals, is the moving average crossovers. The price line cuts through all three moving average lines. The moving average lines crosses over each other. This was our downtrend signal, and the MACD, which does like to provide us some clues. It likes to provide us, some warnings and some signals as well, but it could provide us some false signals more often than it would the moving average. So, but in this case, which we can kind of barely see. There was a couple crossovers right there, so I ignored that. So, but I mainly focused on the primary, the moving average and the price line. It cut through down, and that tells us it's time to sell the call, hold the put. Okay, so I sold the call, get rid of it, and that was in a matter of just a couple minutes. That's 1, 2, 3 minutes is when it told us to do that on the moving average and the MACD all at the same time. So, and even if you waited, that's fine too. Just to confirm, it's still going down. Okay, time to get out of the call. Hold the puts until further notice, and then it goes down. And and I think this day just like you said, everything was open in the green, and then all of a sudden it plunged in the red. And in situations like that, we can now profit on both the calls and the put, because we sold the call, secured the gains. We were at a loss with our puts, but we continue to hold that because we're trying to minimize that loss. And then as it cut through, it went to 0%. Then it went in the red by 1.5%, and that made the put a huge gain. And then the crossover signal on the MACD was right here. It told, oh, you should probably sell. You should, it's getting ready to cross over. And then the MACD turns green here. Now these colored bars are the gap distance bars. This tells us, the distance between the two moving average lines on the MACD. So whether they're trending downwards or upwards, or whether they're gaining more or less. And so, but it gave us a little warning here, but it did not yet. The moving average lines did not yet say to sell, because this could be false, but in this case it was pretty spot on. But it didn't tell us to sell the put until right here when it was up. Now I went ahead and just listened to the MACD. The put had good gains on it. Can't complain, just get rid of it. And now we've sold both our calls and our puts, and anything else throughout the day after that is day trading territory. We don't really want to buy things to hold throughout the day, because what if it doesn't just move? What if it doesn't move at all? Just like this, we bought here, and if you were to and then here, I mean, it didn't do anything. In fact, you're going through time depreciation going through all this, but then it goes up, and then it's just But this is great day trading, where we can now switch from the 1 minute. We can go to the 5 minute. We can buy puts up here. And then we can sell down here, or buy calls. So that's where we can kind of have that transition from going from the 1 minute graph to the 5 minute graph, because as things start to kind of mellow out, the graphs look better on the 5 minute than they do the 1 minute. So hopefully that makes sense.
That was really helpful. Just two follow-up questions. So back on that 1 minute on Amazon, in the first minute. So you saw that little intersection high there. That's the first minute point drop. If that would have went up instead of down the next minute, you have then sold that. Because there would have been no EMA crossover to tell you to sell that. It would have kept going in uptrend. At what point would you have sacrificed that? How long were you holding on to it, and when you say, all right?
Well, if you're still holding the put and it went up?
No. Let's say instead of going down here on the 1 minute, it goes
okay, like here. Okay, yeah, let me see if I can find a scenario like that. There may be something like that this week here. Let me see. You're saying what if it...
I'm trying to understand what made you hold your put more than 2 minutes.
The crossover signals.
That made the
the crossover signals is what gives us the signal whether what to do. And so let me post this really quick, and I'll show you here. Let me see. The Learning Center. I can post this there. And I try to post this
because if the uptrend would have continued, because if uptrend would have continued from the pre-market, there would have been no EMA crossover to sell the put. It would have been all up.
Yeah.
And then that put would have went from being worth 17 cents at the 2 minute mark to zero.
Yeah.
And so that's a risk that you were willing to take at that point to see whether the trend would confirm or reverse.
Yeah. So. And I try to kind of configure these a little bit so that way they're similar to the real graphs and stuff. So with what we were seeing with that was like this bottom image here, where the stock market opens and then all of a sudden the price goes down. Well, that was the signal to sell the calls. And then as the stock price begins to go up, that is our indication to sell the put. And so it just depends on what's going on with the stock. So in this case, if the stock market opens and the stock price goes up rather than down, this would be our first signal. So if the stock market goes up, which we'll see a lot of these here after the election, the stock market opens up, kind of has a little rally, and this is where we want to either sell our calls once the price line cuts through the moving average lines, or we can also buy puts. If we already sold our puts or don't have any or whatever, we want to day trade. But these are the very, very important signals that are just very important to to learn and understand, and that's why, out of sight, out of mind. That's why I throw these out there. If you want to save them, you can print them up. That way you can always look at them for your benefit. That way we can kind of compare it.
I got a follow up.
Sure.
I got a follow up to this. So, now let's say I sold my put on my call within the first 2 minutes. I bought another put at that EMA crossover at the third minute. When I bought that put, I wasn't sure what expiration and strike was first. So I took the soonest strike, the closest strike, and the soonest expiration. Is that the right strategy too when you're day trading? And on a Friday too, I mean, where the expiration date was Friday, should my strategy there day trading be different?
No, so if I'll pull up kind of our rules and guidelines, but normally our guidelines are that to always select when it comes to stock options, not ETFs, is to always pick the soonest expiration date. And the reason why that is because if we pick the soonest expiration date, it'll have the most volatility. Because if we're in a very volatile day, yeah, we may lose 100% on one side, but we may have just gained 2, 3, or 5, or even 1,000%, or 500 or 1,000% on the other side. And we want that kind of volatility. And if you don't get the soonest expiration date, let's say you get an expiration date that's a month or a couple weeks from now, you may lose, like, let's say 20% on one side, but you may have gained 20% or 25% on the other side. So the volatility just isn't enough to make it worthwhile. And so,
I didn't mean to put a straddle. I'm sorry to interrupt you. It's clear for the straddle, Carlos. Strike price closest to the current price and expiration, or expiration. I meant in day trading. So I'm done with my straddle for the day, and I see that EMA crossover on Amazon at the 3 minute. I'm like, oh my god, I want to buy it. That put that I buy, do I follow the same rules that you give us for the straddle, which is strike price closest to the current price and earliest expiration? Do I take that same?
Oh yeah, definitely. Yeah, definitely. Always at the money and always the soonest expiration date, even if it's a day trade, because you want to maximize your opportunity the most. And that's the best way to do it. But for the majority, though, for our primary rules, we can see for guidelines and stuff, I have here, and these are pretty much my personal rules that I share. But rule number 1 is always straddle heavy on the top 5. It's pretty much the top 3. So I need to fix that. Top 3 stock options, which is again Amazon, Apple, and Tesla. Always go heavy on those. Rule number 2, strike price always at the share price, whether you're straddling, day trading, or whatnot, unless we're doing like one of those very long, like what we were seeing with the high open interest, things that expire in January. I consider those as a lottery, because in case the things are more manipulated, things don't work out, that you have a little bit of investment on that's in case things don't work out, you're not gonna be worried about. But the heavy stuff should always be the top 3 most active stock options. Rule number 3, always the soonest expiration date for the most volatility. So we just talked about that. And then rule number 4, buy straddles 5 minutes, or like I said, as long as within 5, 10, 15 minutes before close, just make sure you get them in there before close. That's really, really important. Hopefully it's not one over the other. Oh, my calls expired, but my puts didn't. It's like, oh my gosh, obviously you got to dial down in your platform better. You need to make sure that they execute every time. One of my tricks is when you're buying, always buy a couple pennies higher. That'll ensure that it'll execute. Or if you're selling, sell it for a couple pennies less. That'll ensure that it'll execute, because it takes time for people to place their order. It takes time for them to put their settings and stuff in there, depending on your platform. I've seen some of you guys use like TD Ameritrade or whatever. It takes like a minute for somebody to put in all their stuff in there and to blast it out. The stock market is not waiting for nobody. And so that's why I use the Robinhood platform. I look at the graphs. I use Webull on my computer for the graphs. I trade on my cell phone using the Robinhood app, because it takes me 5 seconds to place an order. I can buy 100 contracts, and it takes me 5 seconds to do that. And so that is quick. We need to be lightning fast when it comes to executing these orders. If it does not execute, we got to go back in there. We need to replace it, modify it, or remove it, start over. It needs to be executed before the stock market closes. Otherwise, you could experience a catastrophe the next morning if things don't work out. And so that's why it's important to always never have a call without having puts, never have puts without having calls. And so rule number 5, avoid earnings and splits for the majority, because sometimes people, when I post it, because sometimes people get confused, why are we talking about earnings when this is part of our rules? Because, you know, this is for the majority to be the safest strategy as possible, because sometimes people get confused about the earnings and they go heavy on earnings. No. You know, earnings are a lottery play, just like buying a lottery ticket. We go light and hope to win big. And so but that's why I have that on there, because earnings, stock options can be affected by IV crush, which is also known as implied volatility crush. It devalues both sides if things don't work out. Stock doesn't move or anything, or it's manipulated, or there's a glitch or something. So rule number 6, avoid straddling throughout the middle of the day to minimize the time depreciation. So these are just very simple, basic rules that are very easy to maintain, you know, consistent gains. And a lot of times you'll notice if you break any of these rules, you know, you feel like, you know, we got punished by the stock market gods or something like that because we got off track. And so it's always best to go back to the basics. These are the basics, the basic rules. And so hopefully that helps. Like, we're always, you know, posting it. I'm out of time, so I got to get going. Hopefully this meeting has been very, very informative. I'll still be available in the messenger in case you guys have any questions. This is recorded, so I will be uploading it to our YouTube channel. Thank you guys. We'll see you next week, and have a great weekend, and let's make lots of gains this week.